The latest minutes of the US Federal Reserve showed that after prices went up and the US economy showed clear signs of recovery, some Fed officials were eager to discuss the possibility of reducing support measures. However, traders prefer to ignore the hints about a possible rate hike. Thus, the US dollar index, which measures the value of the greenback against the basket of 6 major currencies, retreated to yearly lows during the last trading week and closed the session at the mark of 90 points. Investors count on the fact that the Fed officials need to see clear signs of a strong economic recovery in the country. Yet, the full recovery may take longer than expected. The US dollar lost 0.3% over the week. The single European currency managed to reach a 4-month high at 1.2245 amid an overall weakness of the US dollar. The economic data also supports the euro. According to the report from IHS Markit, business activity in the eurozone grew at a sharply faster pace in May, exceeding markets' expectations thanks to joint efforts of the EU members. On the other hand, signs of inflationary pressure have increased. Officials of the European Central Bank insist that rising inflation has a temporary nature and consumer prices will fall next year. The British pound also took advantage of a weaker US dollar and managed to break above a strong resistance level of 1.42. This was a 3-year high, but the sterling couldn't hold above it for long. Investors were encouraged by reports that the UK economy expanded at its fastest pace on record in May on the back of tougher pandemic restrictions and higher pent-up demand. Besides, retail sales in the UK surged by 9.2% in April, which was much faster than expected amid reopening of non-essential stores. Meanwhile, consumer confidence rose to its highest level in May since March 2020. Inflation has also spiked to its highest value in 13 months, and the data on the UK labour market for the first quarter of 2021 indicates that the employment situation is getting better. Last week, Bitcoin lost another 22%. Just 5 weeks ago, it was trading at $62,000 per token, but during the previous weekly session, it plunged to $34,000. A sell-off in Bitcoin was caused not only by Elon Musk, but also by the decision of the Chinese government to ban all financial operations with cryptocurrencies. After a double blow, Bitcoin is heading for a new low. Analysts assume that this will be the level of $36,000. After reaching it, the number one cryptocurrency may rebound. We would advise traders not to rush and monitor the situation for a while. Currently, the nearest resistance is seen at $48,000. It's better to open buy positions only after the price settles firmly near this level. The oil market turned bearish as well. Oil traders failed to benefit from a weaker US dollar as the progress in nuclear talks between the US and Iran scared investors off the oil market. A rising number of new coronavirus cases in Asia also weighed on the crude prices. Nevertheless, oil finished last trading week with gains amid fears over disruption to fuel supply due to adverse weather conditions in the Gulf of Mexico. Meanwhile, gold finished another week in positive territory. This was the 7th consecutive week of gains and the longest period of growth for the yellow metal since July 2020. Today, gold is in high demand as a hedge against inflation amid a rapid pace of economic recovery in the US and rising inflationary pressure. Against this backdrop and the fact that investors flee from Bitcoin towards gold, we can expect further growth of the precious metal in the near term. You've watched the combined review of financial markets with me, Anna Kasatkina. Thank you for watching and stay tuned.